All right. Hello, hello again. All right, so I am going to jump straight into my part, and I know we have talked at other conferences about more of the theory behind what we're doing with the lit transition and all of that. We're not going to do that this go around. This go around, really what I want to focus on is what you need to be doing right now, and then also what you will be doing in 2017. So really, let's just getting down to the nuts and bolts of how this actually plays out. So the first set of slides that I have here are going to be for those counties who are currently either in process of modifying your income tax rates, or even at this point you could still technically be considering it. You're running short on time if you want to make the change for 2017. So this is very specific just to those counties who are taking action right now. If you are not currently looking to change your income tax rates, you're comfortable with where they're all at, zone back in about 5 minutes, and then we'll talk about 17. So, all right, so for right now, between now and pretty much the end of the month, October 31st is your last day to make a change to your income tax rates that will impact 2017. So for this month, your adopting body can be adopting a resolution or an ordinance that will add, modify, increase, decrease, rescind one of your existing income tax rates. I've included here just kind of a reminder on who your adopting body is. Former CAGIT counties, we're looking at your county council. Former COIT counties, we're looking at your local income tax council. And then also I have this broken out over the next few slides between property tax cap or property tax relief rate, your expenditure rate, and your special purpose rate. And the reason why I went this route is given the timing of what we're doing right now and what your options are right now, we need to be a little specific about what you can do under each different scenario. The one thing to keep in mind, and I'll end up saying this again, but just to kind of start, we had talked in the past about this concept of allocating either your property tax relief rate, meaning choosing where you want those credits to go, or likewise allocating your expenditure rate revenue between certified shares, public safety, and economic development. The concept of allocation is not currently an option. That is something that you will be able to do in 17, but for right now, that's not something that we can do. So the next sets of slides kind of will share with you how to accomplish what you want to accomplish without actually doing a reallocation. All right, if you are going through this process to make modifications to your lit rates, we did release in August some templates that we're asking you to follow. Statute prescribes that the department will prescribe those templates. So we have released those. Those include a public hearing notice as well as a variety of different resolution and ordinance templates depending on what you are trying to accomplish. Again, for those of you who are not currently going through a rate change, there's nothing you need to do with these particular templates at this point in time. Just know that in the future, if you do make a change, you're going to want to start from those templates. All right, along with those templates, you do have the opportunity to have the department review the templates, review your prepared documents prior to actually moving forward with it. Technically, we have 30 days to complete our approval. It has not been taking us anywhere near that long, and especially now being in the month of October, if you're kind of scrambling here at the end to get something done, you can send it to us, and typically within a day we can get back to you and let you know, make sure that those ordinances and those resolutions are in good shape. I definitely do recommend going through that process. It just makes everything much easier on the back end once you've actually done your adoption and you submit those ordinances to us. Ideally, we would have already caught any problems prior to actually doing your adoption. Once an adoption has occurred, the adopted resolutions or ordinances need to be uploaded into Gateway. The process is exactly the same as how it has been in the past. So you go in and we have within your budget form 4 upload area within budgets, you have the option to select a lit ordinance and you'll upload it there, and then when you do that, it automatically goes out to probably about 5 or 6 different state agencies at this point. And that's kind of how we receive our notification. If we encounter any problems with the resolutions or ordinances that are uploaded, we will get back in touch with you. If you don't hear from us, you're in good shape. All right, so property tax relief rate. These are the rates that are going to be used to provide your credits for individual taxpayers. And so what I have here in the bullet points are all of the different categories for the property tax relief rates. These are the new categories under the new lit structure. What you cannot do right now, though, is you cannot say we currently have a property tax relief rate of, say, 1%, but we no longer want to give it to homesteads, we want to give it to our 2% bucket instead. That right now is not an option. That would be a straight reallocation, so you cannot do that right now. What you can do right now would be if you determine that you need to make a change in your overall property tax relief rate, you can increase, decrease, or add a rate. And within that change, you can specify where that change is to apply. We probably won't see this as much with property tax relief. We have been seeing this as it pertains to the expenditure rate. But just in case you were looking to say, no, we really didn't want that much money going to homesteads right now, you can actually come in and modify your overall rate, which will then help to drive how much you're actually giving to those homestead taxpayers. And again, I also have here, while we're allowing you to do that and make it very clear where you want to apply an increase or a decrease, something that you cannot do would be to decrease one category and increase another category, still coming back to the same exact rate that you already had. Doing that essentially is just a reallocation. And so we're not allowing that to happen right now. So all of these, well, especially this last comment about not making this adjustment, this is really going to be applicable here in the July 1st to October 31st timeframe. So post the June 30 deadline to do your allocations. All right. Let's see. In terms of effective dates on your property tax relief rate changes, I've kind of included everything here just so you have the feel for how this will happen. But if you had adopted a change to your property tax relief rate between January 1st and August 31st, the tax itself became effective on October 1st. And when I say that the tax is effective, that means that's when your actual employee payroll withholdings have started. The difference, though, is in terms of when you will see this money and when it will actually impact the tax bills. That will not occur until the Pay 2017 tax bills. Similarly here, if you adopt in the September or October months, the tax will be officially effective on January 1 of 2017, again, meaning your payroll withholdings start January 1, and then the actual dollar amount, the revenue that you're receiving can be used for credits in the Pay 17 tax year. All right. Next, then, we have the expenditure rate. And again, a lot of these slides are going to seem really similar because all of these are under the same kind of constraints right now since we're post June 30. So right now for your expenditure rate, you do not have the ability to go in and say we want to leave our expenditure rate at 1.5% or whatever it may be, but we want to shift it between certified shares and we want to move it to public safety or something along those lines. That's an allocation, so that's not currently an option. What you can do, again, very similar to property tax relief, what you can do would be to make a change to your actual expenditure rate. So if you wanted to implement or an increase in your expenditure rate, you can do that, and then you can specifically tell us the revenue from this increase is to be used for public safety. So this would be a situation where you need to be very clear within your resolution or ordinance to say, here's how we want these dollars to be used. If you don't specify within your resolution or ordinance a particular use for that increased revenue, assuming that you're increasing the rate. If you don't specify a particular use, then that revenue will be divvied out the same way that all of the other revenue from your expenditure rate is currently being divided. So just kind of be aware of that. If you are looking to do a change, make sure you know, are you trying to target it somewhere, or are you just generally speaking trying to increase your overall income tax revenue, and you're comfortable with the way that it's currently spread between certified shares, public safety, and economic development. Again, similar to property tax relief, it's not possible right now from July 1 to October 31st. It's not possible right now to go in and just say, well, let's decrease here and let's increase there, but that overall rate stays the same. That would just be an allocation. All right. Expenditure rate changes. This is very similar to your property tax relief. Except now we are talking about when you all will actually receive dollars from this revenue stream. So again, if you did adopt a change in your expenditure rate from January 1 to August 31st, and I would say especially here in 2016, there are a couple of additional caveats to that due to the lit transition. But generally speaking, if you adopt between January 1 and August 31, the tax itself becomes effective October 1, so payroll withholdings change October 1. You will start to receive that money in January. So on all of these, it's always going to be January when you start to actually receive the money. Similarly here, if you adopt in September and October, the payroll withholdings go into effect on January 1st, and you still also start to receive revenue in January. That may seem a little odd to say, hey, we're just now starting to do the payroll withholding. How am I already going to get revenue from it? Essentially, the state kind of floats you for those first couple of months until we actually have some revenue coming in. But it makes it much cleaner, I think, for everyone to just know January 1 is when you would see a change in your actual distributions. Lastly, then, we do have special purpose rates. These are going to only be for those counties that specifically have authorization to do a special purpose rate through the General Assembly. If you do currently have that authorization, you can still be in the process right now to be changing that rate. And the effective dates are the same here as what we've talked about. If you had taken action prior to August 31, effective October 1 for the new tax, but the revenue will change January 1. And if you take action in September or October, the tax is effective January 1 at the same time that the revenue would change. So that's really, right now, kind of is the last big push if you're trying to have something that will actually impact 2017. And so just kind of wanted to make sure all of you knew what your options were yet this month. If you're not currently in the process of actually changing your income tax rates, but maybe your budget process has said to you, through your budget process you've determined, yeah, we probably need to do that. Now we'll walk through what you can do if you're not going to be able to get that accomplished by October 31st. So historically, under the old local option income tax statutes, you actually did not have the option to do a new adoption in November and December. That has changed under the new lit structure. You can take action in November or December. It's just that the action that you take in those 2 months will be fairly significantly delayed. So what that means would be if you choose to adopt, say, a new income tax rate in November of 2016, it will not start for the purposes of employee withholdings. It will not start until October 1st of 2017. And then the revenue from it actually would not start to be received until 2018. So you can take action, but certainly that's a lot of long-range planning if you're in that mindset. And just know that if you do take action in November or December, it's definitely not an immediate impact in terms of the revenue that you're seeing or the tax actually being withheld. All right. Next then we'll get into what happens in 2017. This is where probably the most significant changes will be within January through June of 2017. This is where your adopting body does have the option to do those allocations. So they can come in, and there are two different types of allocations that they can modify. It can either be on your property tax relief rate, modifying where they provide that rate for the purposes of actual credits, or they can modify within your expenditure rate how that revenue will be utilized. The concept of an allocation change, this is saying the rate itself is not actually changing. We're just changing where that revenue is being utilized. And so we're not talking about a rate increase or decrease with this, but any action that is taken in the first half of 2017, those actions will start to impact the revenue being received in 2018. So I think this is good from the standpoint, especially of some of your budget process plannings. You can, by June 30th, hopefully you would know, hey, has the adopting body decided we want to direct more money to public safety or more money to economic development? So all of the units within your county can kind of react to that and start to plan for it for their budgeting process. In terms of, the impact, like I said, property tax relief, that will actually hit your taxpayers in Pay 18, and the expenditure rate, the revenue will change in Pay 18. Lastly, also within 2017, that reopens the window on doing your rate changes as well. So starting January 1 of 2017 all the way through October 31st of 2017, that's again when you can be making actual rate changes to your property tax relief expenditure rate or special purpose rate. I have not gone through and kind of detailed out everything here because it's going to be very similar to what we talked about for what you can do yet this month in terms of when those taxes will become effective and then when you would actually start to receive revenue. The last thing I did here, and I don't intend to walk through these, but what I did try to do here was provide you with a few sheets that hopefully are going to be helpful, kind of more cheat sheets, specifying when we get into 2017, if you're trying to think through, hey, if I take action right now, when is this actually going to impact things? That's what these next few slides will get to, kind of showing you, like here for the property tax relief rate, if you actually are doing a rate change, meaning you're increasing or decreasing that property tax relief rate, when will it impact your payroll withholdings versus when will it actually impact the tax bills? So I have something similar here for both property tax relief, expenditure rate, and special purpose. But again, those are just more cheat sheets, and certainly happy to answer more questions on those later when we're in Q&A. That's it. I'm going to turn it over to Fred then.